And time for business now with Nona Pelsier. Nona, the Reserve Bank. So it's suggesting that the banks hold more capital in reserve?
Yeah, they're wanting the banks to keep more of their funds aside for that rainy day, but actually not a rainy day, much more like a storm, the kind of a flood that you would see every 200 years. So they're saying, look, we are vulnerable to economic shock. The banks haven't been holding enough in reserve. We think that they should hold more. What they're proposing is a lot more, and it's going to cost consumers and it's going to cost shareholders. Now, the idea is to make the economy more resilient. So the banks, the Reserve Bank is all about financial stability, monetary policy. So they want the banks to hold more money in reserve. They're going to say, keep more of your profits aside over the next 5 years. That's not going to make shareholders happy, and our dollar dropped about 0.5 cent as a result. Now, I spoke with the Massey Business School director, Claire Matthews, and she said she had a quick look at the proposal, and she thought the bank might be overly conservative. This is what she had to say.
It's not a sign that there's any problem imminent. It's simply the Reserve Bank taking steps to ensure that we do have a sound economy and a sound financial system that will be able to continue to operate and to avoid potential issues that could arise otherwise.
And even if that only occurs once every 200 years.
Yeah, well, it's a bit like a 1 in 200 year flood. It might only happen once every 200 years, but if it happens, it's pretty disastrous, and therefore that's why you want to avoid it. If we have a banking crisis, the reality is it would cause a lot of pain for a lot of people, and therefore doing things to avoid it is really, really worthwhile.
And that's Massey Business School director Claire Matthews. One of the things that did come out was the Bankers Association. Everyone's really digesting this document, and they said, look, the banks are already holding enough capital to survive a 40% drop in household prices.
40%.
And not rather household prices, house prices.
House prices. Yeah,
That's right.
I got what you meant.
Yeah, 40% drop. Claire says, well, yes, but if that happened, there'd be other costs, so watch out.
So, and speaking of houses and house prices, so the trend is still going up, is it?
Yeah, so it's mixed, actually. In Auckland, prices are still on the down, and also in Christchurch to some extent. They're marginal drops, but it's not on the plus side. Where we are seeing growth is out in the regions, and Wellington is still doing really well, double-digit growth there. And
are you classifying Wellington as a region, Nona?
No, I'm talking about the region of Wellington.
Okay.
I don't mean
yes.
Wellington as a city.
Yeah.
Sorry. So the region.
Yeah,
we're talking about regionals. Yeah,
so we're taking the more rural areas as well.
It would be more than just Wellington. It'd be the Wellington region.
Because I was going to say, we're about to get a flood of texts about that.
No, I didn't mean it as a city. And I wasn't talking about Auckland as a city either.
Right.
Talking about the Auckland region. These are regional differences. And so, just so anybody is... And the regions that were doing well were, like, for example, the Hawke's Bay, Tasman, Southland, Waikato, Northland. So there's a lot of regions that are doing very well, but the Auckland region not so much, and we're still having issues with Christchurch there. So it's making it more difficult for first-time home buyers to get into the market because those prices are still, moving ahead of them. The Kiwi Build may help, but the basic bottom line is that we still don't have enough houses available in the market, so prices will still be under pressure.
Rest of the markets?
Interesting. We had another takeover offer today. Yeah, for Methven, which is a tap maker. I don't know if people know about this company. Yeah, it's they make showerware, bathware, that kind of stuff. Anyway, look, they have an offer from a company in Australia for $1.65 a share. It works out to about $1.65 a share. They're going to do it through a scheme of arrangement. A scheme of arrangement is different than something that's done under the takeover code. So it's more friendly, and there's cooperation and that sort of thing. And it's a little different. The rules are different. So anyways, this would be a scheme of arrangement. The details would be made to shareholders for a vote potentially, I guess, in April. That saw Methven's share price rise 32% by 37 cents to $1.52. Now the offer is $1.65. That values the company at just over $120 million. And it had been cheap for a while because they had some trouble over some time, and that the price has been somewhat depressed. So this would have been a big, big bonus for shareholders today, for certain. Anyway, our dollar, though, as I said, dropped to 0.5 cent because of what happened with the RBNZ talking about capital reserve. So we were at 67.9 US cents, 94.5 and 94.5 Australian, 53.8 pence. Now, the top 50 index fell, so that's quite a remarkable thing against that Methven rise. 0.8%, 71 points down to 8,723, and that's really still because those fresh wounds with the trade talks and all sorts. You know,
it rumbles
it
on.
just will not leave the markets alone. No.
Thanks, Nona. Have a fantastic weekend.